Hello. So, this account is my personal online journal where I share my trading experiences and the things that I learn from the market every day. This video is going to be a bit of a two-in-one. It's going to be the second episode of my Time in the Market series and also a trade update, a trade recap. In the morning, I entered this trade during London session, as you can see. Price had just taken out. So let's look at the analysis on the daily time frame. Of course, I was very aware of all the risks of this trade. So this is a daily low. Let me just get rid of this gray box because it's a monthly fair value gap. This was my daily low that got traded through in London session, and after that, I got this bullish candle that engulfed the previous one. So my entry was on the open of this next candle. My stop went below this low. As you can see over the course of the next few minutes, what happened was price traded through it, took me out for a loss, then gave a bit of a reaction, but ultimately I just ended up consolidating in that area. This is one of the things that price can do, and like I mentioned, this is gold. You have to look at the context of the market as well. The market is extremely bearish, heavily bearish. So what I was essentially attempting to do was pinpoint the exact start of a possible retracement. Now, I did not need it to be the overall retracement for this entire range, but I had hoped that even a 20, 30, 25 pip move in the opposite direction could be in order. That was the reason behind the trade, but like I said, it was gold that I'm not familiar trading. I know that gold has a tendency. So if you see, after taking me out, you see that for about 2 to 3 hours, it just kept doing this wick, small range, wick, 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 wick. Then it gave a bit more of a reaction, but it's ultimately just consolidating in this entire area. So that's a lesson learned on gold. I will keep testing my strategy on gold. I guess what I'm going to do going forward is instead of attempting to take these sort of counter trend trades on gold, I take them on Euro USD. Instead of attempting to take them on gold, I will just wait to trade in line with the trend subsequently for gold. Now, onto my time in the markets episode. Something interesting happened today. So, like I said in my weekly outlook video, I was expecting a monthly low. If you go on the monthly time frame, you can see that there's this monthly low, this particular monthly low that I was expecting price to trade to. It was my ultimate target. I wanted an opportunity to go short within this huge monthly range, with this being the ultimate target. It is just 2 days into the trading week, and that objective has already been fulfilled. So this was today's price action, this was yesterday's price action, and we see that within just 2 days, both objectives, this weekly objective and the ultimate monthly objective, have been traded into. You'll recall that I had said what I wanted to see at the start of the week was for price to do something like this, trade into this daily fair value gap, then give me a move to the downside. That did not happen. Now, if you don't see a retracement on the daily, you go down to the 4 hour. On the 4 hour, this fair value gap was created yesterday. I was hoping that price could potentially trade into it. I would have taken the sell into this level. That did not happen as well. The price action of the last 2 days created this fair value gap. So today's price action has now created this particular fair value gap, which is unfortunately now not an area where I'm confident trading from because my objective, which is the liquidity resting below this monthly low, has already been achieved. And if you take a look at the daily range that has been created here, you can see that this particular fair value gap is in the discount of the range. So it's lower probability. Then again, this is a daily swing, and so daily swings can go on for weeks. For example, look at this particular swing in price. Let's say from here all the way down to here. It was about Let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. So, about an entire month of trading with predominantly bearish candles. And the trading range was about 450 pips. Now, in comparison, this range that is now forming has only moved about 342 pips. So, if you're expecting price to have the same distance from this point till it begins to retrace as it did from here, you could say that there is still room for price to move to the downside. But I am aware of where we are on the monthly. This is a significant monthly low. Of course, if this low has been taken out, the next logical low is this monthly low, which is a lot more interesting because this low happens to sit right on top of a monthly fair value gap. Now, that particular point of interest is still about 200 pips away. So I'm not too concerned with that. However, the lesson I wanted to take out of this today is this. I was expecting price to trade into this monthly low since last week. And remember, I had mentioned that if price came here and gave me an entry, that is, as soon as price trades below it, if during peak trading sessions, that's New York or London, I see an engulfing candle, I will look to take a short term trade into the opposing fair value gap on the higher time frame. So that would either be a 4 hour. So that trade could potentially look something like this. This is an engulfing, this is the low, and then I trade into whichever fair value gap has been created, as long as it gives me a 1 to 2 or better. Unfortunately, I was not able to take this trade today because the setup happened outside my trading hours. So if you see today's price action, this was Asia range, it traded bearishly with a bit of stair stepping price action. Then London came, consolidated essentially, still with a downward tilt. New York consolidated as well while heading slowly downwards. This was London close, marked by this dotted green box. This was London close. Still very dirty price action. And you see, as soon as it traded below, excuse me, as soon as it traded below the low, you can see there's about 1 hour of consolidation. 15 minutes, 4, 1, 2, 3, 4, 15 minutes dojis. And then eventually, after hours, after London close, this was around 12:45 New York time. So the morning session is already over. It gave this reaction. I understand why it would give this reaction because one has been doing all of this, two is just traded below a monthly low. But it gave this reaction outside of the time when I'm allowed to take a trade. And so even though yeah, it has moved about 9 pips, 8 pips in profit, I can't take this trade. I'm not in this trade. However, it decides to play out. Now the reason is one, it's taking on overnight risk. Two, is happening outside of trading hours. Three is that tomorrow is CPI, and I do not like to be in the markets during CPI. This brings me to a point that I wanted to make. On this move down, I have been waiting for an opportunity to get into this downtrend. The last time that there was an opportunity to get into this downtrend was when price did this and then it dropped. But in the last now 5 trading days, that's an entire week of price action, there has not been any opportunity. Price has just been falling. So the fair value gap was created, did not trade into it. On the 4 hour, fair value gaps have been created, left behind, not traded into. And if you go down to an intraday time frame, my trading strategy, as you know, relies on a liquidity sweep of a time-based range. So Asia traded above, you go short, or New York traded above, go short, or London traded above, go short, all within hours. And you can see that in the past 5 days, this has not happened at all. See, Asia range, London did not trade above it, just melted. Asia range, London did not trade above it, just melted. And all the fair value gaps that are forming have not been mitigated, not giving any entry since the election. Now, there was a trader I listened to on a particular podcast who said that just because there is a move does not mean that there was a trade. And the longer you spend in the market, the more true you realize this is. This has been, like I said, about 320, 340 pips of movement, and there has not been an opportunity for me to take a day trade. The only point that would have made sense was for me to have been in this trade for whatever reason from this point. And it would mean, so when you look at, okay, how can I take a trade? You ask yourself, who is likely already in this trade? If for any reason, let's say I had a trade here and my target was all the way down there. Now, if I was already in this trade, of course, I would be happy to hold it for a 4.7 hour trade. But let's say I wanted to pyramid into my position, I wanted to enter. There's no favorable risk to reward. There's no point in this range where I could enter and take a trade. My stop would have to go above this high. So let's say I absolutely wanted to get it in. I was correct. I'm correct about the bias. I'm correct about where it's going. I know it wants to take out this low, which it has now done today. But if I wanted to enter anywhere in this range, my trading criteria was not met, were not met at any point in time. There was no liquidity sweep, no trading into a higher time frame fair value gap. So if I wanted to enter into this position, it's not that I could not have entered, it's not that you can't place a trade. But let's say when market was here, right? You take a trade. The only logical place to put your stop loss is up here, targeting the low that you hope for. Now you need to have a 192 pip stop loss to absorb the possibility that because at any point in time, price could have done this. It could have come back into this daily fair value gap. It could have come back into this 4 hourly fair value gap. And that's what you hope for. That's what you want to see. That's what makes you get into a trade. Could have come back into this daily fair value gap, but it did not do any of that. And you do not know whether price will do that or not. And as long as price does not do it, we do not have a trade. When we say that trading is difficult, when people have problems with trading, these are part of the reasons. Sometimes we see that price is dropping, price is moving 300 pips. Surely there must be a way for me to get into it. But it is possible for price to make a move and that you are not able to be a part of it, even though you know where price is going, even though price is doing what you expect it to do. But unfortunately, it does not give you an entry. Now, admittedly, this is just 2 days into the week, but over the course of the past 5, 6, 7 days, there have not been any trading opportunities on the assets that I trade the most. This can cause angst. This is 12th of November 2024, and there haven't been any solid trading opportunities this month just yet. Getting good at trading is getting to a point where you can comfortably live with this, where you can have 7 days of trading, 9 days of trading, 2 weeks of trading with no trading opportunities and not taking a trade, and knowing that it's not because you did anything wrong, it's not because you do not know how to analyze the charts, it's not because you don't know how to position yourself. And you know what? You might see other people on social media saying how they made money on this same asset, on this same chart, on the time frames that you trade. If your model does not give you an entry, you do not have a trade. Secondly, my model is very time based. These engulfing candles have to happen during the major sessions, New York or London. It did not happen. And so, although I waited and watched, imagine sitting through all of this, watching all of this price action, waiting for price. When price was at this point, when price was doing this, at the start of New York session today, I really thought because price came what about maybe 10 pips away, 5 pips away. I was so certain that New York was just going to keep melting and that it was going to give me an entry and I would be able to take the reverse up. But look, it just did this. I'm consolidated for 4 whole hours or so, eventually giving the setup, but after market had closed. And so there's no trade here. These are the nuances from a technical perspective that I want to share on my journal here, and I hope that I am able to refer to it in the future to crystallize my learnings, but also if it helps one other trader who is on their journey, I hope that you can take something away from this.